Right. Okay. Welcome to this session. Uh, we are dealing with bank reconciliations, and we're proceeding from last week. So you find that last week we were looking at a bank reconciliation whereby we're given the bank statement and the cash journals, but it's not always that you get those cash journals. Sometimes they don't give you cash journals, but instead of cash journals and stuff like that, you'll be given statements. Then from those statements, you have to interpret them and be able to what to do the bank reconciliation statement. Right. So when you do this, you need to generally know the items that are supposed to be recorded in the bank reconciliation statement, items that are supposed to be recorded in the cash journals and stuff like that. So use the knowledge that we have from, if you still remember, right. One thing that we should know, let's look at our general format. Right. Our cash receipts journal. We start with our subtotal. Our subtotal is the amount that is in our cash receipts journal before we received the bank statement. So it's the total that we had before we received the bank statement. Then we record all receipts that are on the bank statement, which we had not recorded. So they're supposed to be recorded. All receipts that are on the bank statement, which we had not recorded. Things like direct deposits. Direct deposits. Remember from last week we said these are amounts that are deposited directly into our bank account by our clients. Right. We have got interest income. The bank can credit you with interest. That interest also has to be recorded in the cash receipts journal. Omitted receipts. If there are any omitted receipts, we'll have to record them. Understated receipts. Understated receipts, these are receipts that are recorded at a lower amount. So for understated receipts, we'll have to record the difference. For example, if we had recorded 5,000 instead of 7,000, we just have to top up and record the additional 2,000. Right. We have got overstated payments. Again, for overstated payments, we have to record the difference. Right. So then we've got stale checks. Stale checks are checks that we had paid out, but which are no longer payable by the bank because they are not now more than six months old. So they have to be cancelled. So to cancel a payment, we don't go back in the cash receipts journal and cancel the recording, but we have to go in the opposite journal, that is the cash receipts journal. All right. Then we get our total receipts when we add this news. Right. Then we have our cash payments journal. Now with our cash payments journal, we also start with the subtotal. Right. Then we have got payments that are on the bank statement, which are not on the cash payments journal, with bank charges. We have direct debits or debit orders or stop orders or standing orders. These are slightly different, these things, but their effect is the same. All of them, they refer to amounts that are paid to our payees directly by our bank. So they have to be recorded in the cash payment journal. Right, interest expense. If you've got an overdraft, the bank can charge you interest. You don't earn interest, so they can charge you interest, so that will go in the cash payment journal. Dishonored checks. If you've got any checks that came from customers which have been rejected by the bank, remember that when we received them, we recorded them in the cash receipts, so we have to cancel them, so they will go in the cash payments journal. Right. Understated payments. If we recorded payments at a lower amount, we would then record the difference. Omitted payments. Overstated receipts. Right. This will give us right. Our bank account will be prepared exactly in the same way that we did. So I will not show the bank account. Then the bank reconciliation. Did I show it? Eh? Well, I already did show you these things here.
Yes, you showed us. I wanted to acknowledge that to you, but
Okay, not a problem. Okay, then our bank reconciliation statements. Okay, so maybe we can go to the question direct. So now let's go to question 2. I thought I hadn't given you the things that go there, but not a problem. Right, question 2. Thanks very much. Let's go to question 2 of our question of our paper. Right. After we have done question 2, you can go now and do question 3.
sorry.
So that you can see how everything is done. Right. So on question 2, we have the following information for May 2016 relates to acting traders. So what's going to say? Okay. Number A, complete only the detail and bank columns for the cash receipts and cash payments journals of acting traders for May 2016. Right. So want to do the books for May 2016. So first of all, we have to do the cash receipts and cash payments, So in this case, as you can see, we are not given the bank statement just like what we normally do, but it's a story. We are given a story, so we have to use that story to prepare our books, right? So we have got what? Acting traders, a cash receipts, details, right? Then we've got our bank. Then I want to do them at the same time with them cash payments, so it's still under A, sorry. Right. Now let's start. The balance is in totals. The balance in the bank account on 30 April, that is at the beginning of the month. Remember, we're in May. So the balance for April should be the opening balance for May. Then the bank statement, the balance is per bank statement. The balance in the bank account will be part of the bank account when we do the bank account. Then the balance as per bank statement will go to the bank reconciliation statement. Right, totals is at 31 May 2016. These are the subtotals. So what we do is this one, that will be the subtotal for the cash receipts journal, and this one, the other one will be the subtotal for the cash payments journal. So I'm going to say subtotal. That's 51250. Subtotal 48250. So the totals will go as the subtotals. Right. Number 2, items appearing on the bank reconciliation statement as at 30 April. Remember, we're in May, but not on the bank statement for May. Now, if you still remember from last month, if an item was on the bank statement, a bank reconciliation statement last month, as long as it did not appear on the bank statement and it's still a valid check, it will appear again in the bank reconciliation statement for this month. But we have to check, was it a still check or not? So an item which is outstanding from last month, as long as it has not yet been entered by the bank, it will still be outstanding this period. So now in this case, we check those checks to see if there's a problem with any of the checks. Right, this check were in May. This one was written on 30 November 2015 for crazy dealers. We are now in May. Now, if you check the months from November until May, it has now been 6 months. So this check is now more than 6 months old. So that's a stale check. A stale check will go in the cash receipts journal. Why? Because it's a check that was recorded when we paid the check to the person, but that check is no longer valid, so it has to be reversed. So we record on the cash receipts journal. So that will be crazy dealers. Stale check. Right. Then the other check was written in April. So this one, it's only 2 months old. That means it's still valid. So when we do our bank reconciliation, it is still outstanding. So this check is still outstanding. So it should be in the bank reconciliation for this month again. Right, number 3, items appearing in the cash journals for May, but not on the bank statement. So if they are in the journals but not on the bank statement, they go to the bank reconciliation. Bona fide transactions which are appearing in our journals but not on the bank statement will be recorded in the bank reconciliation statement. So for now, we can just jump these three, this number 3. Number 4, items appearing on the bank statement for May, but not in the cash journals. Right, if an item is on the bank statement but not in the cash journal, we have to record it in the cash journal, unless if it is an error made by the bank. So if a transaction is on the bank statement but not in the journals, it has to be entered in the journals, unless if there's a what? It's an error, but that was made by the bank. Right. A direct deposit for Mickey Mouse for rent. So if it's money coming in, it will go to the cash receipts journal. If it's a payment, it will go to the cash payments, right? A direct deposit from Mickey Mouse for rent. So it's a direct deposit. That means it's money coming in. So they have that will go to the cash receipts journal. Money coming in goes to the cash receipts journal. So that would be Mickey Mouse. Rent income, direct deposit. Right. That will give us 2,500. Right. Then we'll go to the next one. Interest on bank overdraft. If you have got a bank overdraft, you will be charged interest. If you have got a bank overdraft, you will be charged interest. So there's an interest of 750. So that one will be a payment. Right. Then we've got ledger and cash handling fees. Ledger and cash handling fees. That's a payment again. So that will go in the cash payments journal. Right. Then we have refer to drawer check received from data teletubbies. When they say refer to drawer, that's a dishonored check. That means we received a check from teletubbies, but the bank has rejected the check. We call it a dishonored check. So that receipt has to be reversed. So we record it in the payments. So any rejected receipts, they go in the payments. All right. So they have $450. Right. Then a deposit by another client of the bank was incorrectly deposited into acting traders bank account. That is a bank error. Someone deposited their money. Unfortunately, the bank put it in our account. So that's a bank error. We're not going to record it. A bank errors, they go to the bank reconciliation statement. Right. Then a stop order for the monthly insurance premium. That one is a payment. So it will go in the cash payments, Right. A check drawn by another client of the bank was incorrectly debited to the account of acting traders. So someone paid their check, then by mistake, the bank debited our account. So that will go to the bank reconciliation statement. So all errors made by the bank will go to the bank reconciliation statement. Right. Additional information. Check number 4736 for 1535 issued to Barney Furnitures for furniture purchased was incorrectly recorded in the cash payments journal for December 2015 as 1835. So this is what we call an overstated payment because they recorded a higher amount than the correct amount. So we have to make an adjustment by recording in the cash receipts journal to reverse the difference. So we have got money finishers, overstated payment. So there's a part of the payment that is to be cancelled. So we record it as a receipt. That is the difference only. 1835 minus 1535. What do you get? That would be 300, isn't it? Right. We are done. Then we find our total receipts and our total payments. That will be the total receipts. Then we'll have our total payments. So that will be our cash receipts journal and our cash payments journal. So in our cash receipts journal and cash payments journal, we record all those transactions that are appearing on the bank statement but not in our books, and also errors that were made in the cash receipts journal and the cash payments journal. Do you have any questions?
No, it's fine. I get it.
Okay. So we go to the next part. Prepare the bank account and the general ledger of acting traders properly balanced. Right. So we'll say this one will prepare it exactly in the same way that we did last time. Right. Right, we start with our opening balance. Our opening balance is the balance on the bank account from last month. Right, we are told here at the beginning that the balances the bank account was 3158 and it was credit. So if it is credit, you record it on the credit side. If it's debit, you record it on the debit side. Right. So we have our balance brought forward. Since they said credit, we record it on the credit side. Get 158. Right, then we record the total receipts on the debit side. Which we have calculated. So that would be this one here, the 55. So the total receipts will always be on the debit side. Then the total payments will always be on the credit side. Right. Then we balance our account. To balance our account, we check of the two sides, which side is larger between the two sides. We first check which side is larger between the two sides. As you can see, oh no, this one is not 55, that's 51. This one here. Right, but still, if you can see, the credit side is larger. So we enter the larger total on both sides. So that 83,161, which is the larger total, will be recorded as the total on both sides. So the larger total will be recorded as the total on both sides, that is on the smaller and on the larger side. Right, then we'll balance our account. That will be the difference. Then we get our balance report. Right, this is how we prepare our bank account. Any questions? Right. Then we prepare bank reconciliation statements. Right. We start with the balance as per bank statement. We start with our balance as per bank statement. Just a second. Right. Our balance is per bank statement. Right. We know that the balance is per bank statement is here. It's unfavorable at 32,126. It's unfavorable at 32,126. So if it's unfavorable, we record it on the debit side. On the bank statement, an unfavorable balance is reflected on the debit side, and a favorable balance is reflected on the credit side. So always know that on the bank statement, we the favorable balance will be reflected on the credit side, whilst unfavorable will be on the debit side. Right. Then we look at those transactions that are in the cash journals but not in our books. Right. First of all, we had items appearing on bank reconciliation statement at 30 April, but not on bank statement. This one we said it's still, but this one it's still outstanding. This one will be still outstanding. Right. So we record that one as an outstanding check. Right. So we have outstanding checks. The first one it's no longer outstanding. So we'll start with from the second one. That is ICT services. check 685. You can even set the date. Outstanding checks, they go on the debit side. Why? Because when they are cleared, they will reduce the amount in our bank account. Right. Then we also have items appear. Okay, we also had this check again, which was outstanding, the 37085. So we'll leave check 759. Money. $3085. Right. Then we also have another item which is appearing on the bank statement, on the journals, but not in our bank statement. It's a deposit. We call it an outstanding deposit, and an outstanding deposit we record on the credit side. Then we had those two errors. That is number one, a deposit by another client of the bank was incorrectly deposited into acting traders account of 3,500. So that's a wrong deposit. A wrong deposit. To correct it or cancel it, we record on the debit side. Why? Remember that the bank statement reduces on the bank statement reduces on the debit side. The bank statement, not the bank account, the bank statement reduces on the credit side, because it is prepared from the viewpoint of reduces sorry on the debit side. It is prepared from the viewpoint of the bank. Now, if you've got money in the bank, to the bank, that money is a liability. They owe you the money. Right. Then we also had check drawn by another client of the bank was incorrectly debited to the account of acting traders. So if it was incorrectly debited, we have to credit it to cancel it. Ten 350. Right. After entering everything, then we enter the balances per bank account. Which is the one that we found here. It's on the credit, so we record it on the credit side. Right, then that's it. Then we find our totals. So at the end of the day, the two will be the same. So that will be our bank reconciliation statement. Any questions? No questions.
Right. Yes, so no questions, no questions.
Okay, so that's bank reconciliation statement. So my friend, you do number 3. So do number 3, and then maybe you can send feedback like what you did after doing it. Then I can see how to correct it. Then when you get time, can you read question start unit 4? So that for the sake of time, you read the theory. Then when we meet, you just ask the questions that we have on the theory. Then I will then bring the answers so that we can be able to prepare.
Unit 4 is about the accounting cycle with the trial balances and the transactions, right?
I got you.
I was saying unit 4 is about the accounting cycles, the trial balances, and transactions.
Yeah, transactions recording them in the books of original ends.
Yeah. I already started with unit 4.
So you read, then so that we save on time, I'll just come with questions and show you how to do them.
Yeah, I already read unit 4. I'm done with unit 4. I'm going to unit 5 now.
Okay, thank you so much, KB.
Thank you so much.
Ciao.
Sharp, sharp. See you next week.